to record. So I'm going to go ahead and hit the record button. We are recording now. Please do take a moment to follow me on YouTube and Instagram. I do a lot of education there. This training will live on YouTube after today, so that you can circle back if there are things that came up that you are getting confused about or just want more information on. You can absolutely see the entire training on YouTube. Okie dokie, let's see. So, what is a pre-approval? Pre-approval is, everyone says go out and get a pre-approval, right? When you are thinking about purchasing a home or wanting to buy a home. And what is it, right? Well, it's a conditional approval that a lender will generate for you, when they have an opportunity to speak with you about what income you're making, what debts you have, and your credit history in general. Now, the pre-approval is something that is distinct from a pre-qualification. A pre-qualification is a much lesser um, let's say, level of approval, and it's really not going to get you anywhere in the San Francisco Bay Area. In the San Francisco Bay Area, it used to be an actual physical document that you had. Now it's a PDF, or it's an email. But you absolutely are going to need that conditional approval from a lender because it basically communicates that some amount of due diligence has occurred on behalf of the lender on your behalf, meaning they have, looked at what your income is. They probably looked at your tax documents. They probably run your scenario through direct a desktop approval. So there's been some amount of work that's been done, and certainly in a competitive market like the San Francisco Bay Area, you have got to get the pre-approval. So pre-call isn't going to do a thing for you. So you're going to have to push and make sure they give you that pre-approval. It usually takes a little bit more time, but that's the document that's going to get you ready to buy. Now, why is a pre-approval so important? Um, it lets you know what you have to spend, right? Usually you're kind of estimating when you're looking on Zillow and looking on the internet as far as homes are concerned. The reason why pre-approval is so important to get as soon as possible is because it gives you a budget. And I have seen this a bajillion times where folks are like, oh, my budget is, X large number. Right? And they look at houses, they go out looking at all these houses at that higher price point, then they actually reach out to an agent. Then they actually go about getting a pre-approval, and surprise, surprise, the approval is less than what they thought it was going to be. And that usually happens because there are debts that one forgets about, usually a car payment or a student loan, combination of both, that actually pull down the amount of money that a lender is actually going to allow you to borrow. And in many cases, that pre-approval number that a lender gives you is even higher than what is actually affordable, right? So what we recommend is one of the first things that you do as a pre-approval. And I know it's much more comfortable in the advent of the internet to go on the internet and look at properties first. But way back before the internet, 20 years ago, people actually went and got a pre-approval first, right? Or they went and talked to an agent first, or they walked into a real estate office first before actually looking at properties. Maybe they might have seen one driving by or something, but they didn't actually shop to the extent that people do nowadays. So it's a little bit backwards, but it is very important to get that pre-approval as soon as possible. And again, once you get to a point where you're really thinking about offering and shopping, it strengthens your offer and it avoids unpleasant surprises. One of which is if you have been shopping, let's say at the $800,000 range, and your pre-approval it comes back and it's at six. And then you look at the houses at six and you're like, right? Because your eye is now used to those $800,000 properties. And that's not what we want to happen, right? We want you to look at those beautiful $600,000 properties that you can afford and be happy knowing that you're no longer wasting money on rent, paying towards your landlord's equity, but paying towards your own wealth building and generational wealth sustaining activity. So what goes into a pre-approval? All right. Well, there are a number of factors that a lender is going to look at for you. They're going to look at your credit history. They're going to look at your debt to income ratio. They're going to look at your employment, income, assets, and savings. And the reason they're going to balance all of those items is because they're looking to see, okay, how much room is there for a mortgage payment? Oftentimes, the mortgage payment might be the same or similar to what you may have been paying in rent. If you're not paying rent and you're actually buying a property out of your parents' house, which is great, which is the ultimate great scenario because then you haven't started, wasting too much money paying rent. Then they're going to look at your income and see how much room is there really there for a mortgage. Um, so the number one issue that we deal with when we are asking buyers to go and get pre-approved is fear, right? Because in most cases, as I said, they've been sitting in the comfort of their couch at home or at work, or whatever comfortable place, and searching for properties on their phone, not having to talk to anybody, and it feels very comfortable and very safe. Right. But to be able to move forward with purchasing a property, you have to move outside of that level of safety, right? And surround yourself with trusted professionals who can help you accomplish this goal. And one of the most important is really getting over that fear and reaching out to a lender as soon as possible. Something I do want you to know is not all lenders are the same, and not all lenders have the same programs available. So hopefully it's helpful as far as the fear factor is concerned, because there are many different programs and many different lenders. So if you don't like what a lender is saying, you can move on to another lender. You can and should, right? And you should actually get multiple pre-approvals. Right? You should get one maybe from a mortgage banker or mortgage broker and one from an actual bank. And then another type of pre-approval would be from a credit union. So if you have access to a credit union or you would like to join a credit union, they're always a great option as well because their goal is to lend to their members at the most economical rates that they can. Right. So that's actually part of their mission. Whereas with a bank, the bank's goal is to make money for their shareholders. Right. So you can see there are some different interests there and maybe some competing goals and alliances and loyalties. So that's why it's best to kind of try and get a couple of different kinds of pre-approvals from different types of pre-approvals. So you can see, oh, okay, banks a lot of times have great interest rates, but then sometimes they can't actually come through with originating the loan. Credit unions are sometimes more difficult to get the property through escrow because they have more requirements as far as making sure that the property is in a certain kind of condition or just information that they may want. So that's something to bear in mind, but they also tend to have very competitive rates. Mortgage bankers and mortgage brokers might be a little bit more expensive, but they're definitely going to get the job done. Right. So you can see how you might want to try the first two and just have maybe the mortgage broker waiting in the rings just in case something falls through with the other two or whatever combination. Also, if your scenario is a little bit more challenging as far as maybe being self-employed, having gaps in employment, maybe not actually being employed, but having assets, like having a large amount of cash, but you want to take a loan for a part of it. You want to pay in cash, and then maybe you want to refinance into a loan, but you don't actually have income, except maybe from the property, or maybe you have a trust fund. All of these are a little bit more complicated scenarios than a W-2 employee. So you're going to want to also look into those mortgage bankers and mortgage brokers because they are have a lot of programs available to them that would be able to work with your scenario. If you're a high asset individual, I would have said First Republic. They are no longer with us. So you want to check in with your agent, which is why it's very important to reach out to an agent also early in the process so they can give you a few referrals. Right. And so again, if you have a credit union that you love, you say to them, okay, well, I've got my credit union pre-approval and I would like to keep this one, but I'd also be open to getting a pre-approval with whoever you're talking about, right? Because whoever the agent may be referring to you may be someone that in the community where you are offering has a lot of clout. And so when a listing agent sees your offer come in with that pre-approval attached, they'll be like, ah, I get it. This person is very solid. And I will tell you from my background as a listing agent, it is a little bit disconcerting to get a pre-approval from somebody I've never heard of, certainly a bank I've never heard of, and then try to take that offer and pre-approval to my seller and recommend that they sign it, right? So there's a lot of benefit to listening to your agent once you have chosen one that you feel that you can trust and who is knowledgeable, listening to the recommendation they make. Again, it doesn't mean that you have to do something instead of what your suggestion is, but if you can do both, that will really assist your chances. So, but again, it is quite important that you get the pre-approval so you know where you stand. So the kind of documents that you're going to need, you'll help yourself if you pull out some of these things ahead of time. Doesn't have to be. But one thing I will definitely suggest is when you are asked for documentation to get it to the lender as soon as possible. And the reason why this is important is because unfortunately, you are not their only client. So when they ask you for something, if you take a long time getting it back to them, they've moved on to the next client, right? And so your file, it used to be actually a physical file, would get lower and lower and lower in the pile because you're not actually responding, right? So what you want to do is when you are asked for those documents, send them in right away. And a lot of lenders now have it's been nice to see the evolution with them. A lot of them have online systems where they will say, okay, upload this document, upload that document. So you're usually doing a lot of that stuff up front and getting it out of the way, which is great. But again, as you move through the process, and if you are really actively searching, it's probably going to be a 30 to 60-day process. Throughout that process, they're going to need your new updated pay stub. It's tax season now. So once, in a month or two, they're going to want to see those taxes that were filed, a copy of the taxes that were filed. You're going to need a verification of employment, which might be a physical document, might be a physical document and a phone call. So, the more quickly we can get these documents to them and have them pulled together, the better. So these are some misconceptions, and again, we really want to address the fears, and a lot of the fears is just not knowing what to expect. All right, so you don't need a perfect credit score. You don't mean a pre-approval doesn't mean you're definitely getting a loan, although it's probably pretty high percentage of loans that do go through. And you absolutely can and should shop for rates. I remember back in the old days, we would have two good faith estimates, and there would be a certain interest rate at the top of one and certain interest rate at the top of the other. And at the very least, you want to question, right? You want to say, okay, why am I getting this interest rate? And they should have an answer. They should say, well, your income is this, you got that car loan, you got this loan. So that's, pushing it up. That's usually what those things do. You're self-employed, that pushes the rate up. Luckily, the rates have not been going up lately because the mortgage rate, not the interest rate, the mortgage rate, because that's what we care about when we're buying a property, is tied to the 10-year treasury, the funny economy indicator, and that has been going down. And so when the 10-year treasury goes down, the mortgage rates either stay the same or go down. So when you are wondering where mortgage rates are going, you will want to look at the 10-year treasury and not the interest rate, right? Which is the also known as the federal funds rate, which is the rate at which the banks borrow from the Fed, but that's not the same as what you're going to get, right? The banks need to make their money, which is that middle part, which is called the margin. And that's going to be the difference between the mortgage rate and the interest rate. What are the steps to getting a pre-approval? A lot of times people have a general sense, either from some of the online companies that will help you check in on your credit. I've even had lenders say to use those so that you can monitor to make sure that someone hasn't got a hold of your number. And even if they have, lenders can work around it, they'll help you fix it. Their job is to help you fix it, not to judge you, because nobody has perfect credit, right? Maybe these billionaires do, I don't know. Or even if it matters to them, because they have so many assets, they don't even look at their credit probably. But for the rest of us, normal, mere mortals, we do not have perfect credit. So it's really just a matter of having a sense of where that number probably is, doing our best to improve that number. Generally, that requires paying down, not off, but down any credit cards that we have and staying current on whatever loans that we have as far as payments are concerned. And then just getting a general sense of what your expenses are. And so you have a general sense of what monthly mortgage is going to be workable for you, right? So again, most people usually start with their rent because that's a number that they know they're able to meet every month. And then you'll be able to look at it and say, okay, do I have room for another 500 a month or 100 a month, or actually I'd like it to be lower or whatnot. And then, of course, you're going to want to pull together the documents that you saw mentioned earlier. You're going to want to, many of these lenders, as I said, have online applications, so you don't have to talk to anybody. And then there will be a number of options that are made available to you. Usually, there is a variety as far as the mortgage rate that you're going to be paying over time, and whether that's a 30-year fixed, which is usually recommended for first-time home buyers, 30-year fixed being a loan where the interest rate and the monthly payment are the same for the next 30 years. And the reason that loan is very popular is there's very few things in life that you know that you're going to get for the same price for the next 30 years, right? Everything it becomes more expensive over time. So if you could at least lock in your housing expense, that's one of the primary benefits of owning your home is the concept of having a fixed monthly housing cost as opposed to rent, which just goes up, willy-nilly or, at the whim of the landlord or whatnot. So yes, and then once you've done all those things, you'll be ready. You'll have a pre-approval letter and you'll be able to confidently go shopping. Once you have a pre-approval, and this also goes for when you get into contract on a property, be careful with opening new credit accounts. Don't make large purchases unless you make them in cash. Um, Try not to change jobs or income sources. You could always add them, but changing, especially when you change out of a particular field, will cause some issues as far as your loan is concerned. And then, of course, I am not sure why, but lenders really don't like it if large amounts of money show up randomly in your accounts. So, for example, if you are wanting to have your uncle, your grandparent, parent, brother, sister, give you money towards your down payment. The lender needs to know that. It's completely fine. It's great, actually, because it'll make the whole process easier. But you do want to explain to the lender that that's what's happening. Generally, they will want a gift letter, which is just a letter that simply states, I am giving this money. I don't have any interest in owning the property, but I'm giving this money so they can purchase this property. And that's it. That's the thing with letters of explanation as well to lenders. They should just be very cut and dry, no extraneous information about, well, 20 years ago, I promised them that I would, no, psh, nothing. Just exactly stick to the facts, because what you're going to do by adding a bunch of extraneous information is confuse the underwriter, and underwriters are who is the person who is going to look at your loan and the property that you're buying, and they're gonna like give it the rubber stamp, or they're gonna ask for more explanation. So the more information you give them, the more explanation they're gonna need. So we want to try to keep this as very simple and as straightforward for them as possible. Um, they are saying here, or it says here, that you would be then getting a realtor. I believe that you do this in the beginning, right? Before you even start looking on Zillow or Redfin or whatever. And the reason why is, again, it's not about gatekeeping, but it's about helping you target your search, right? Because nobody has time to waste anymore. Everybody's got jobs, they've got side hustles, they've got family, they've got things that they would rather be doing, perhaps, than, going to day after day combing through listings to try to figure out what property is going to work, right? So if you work with a realtor, it is their job to help that process be smoother and more efficient, right? So a realtor knows what properties are on the market. A realtor knows what lenders are currently originating loans and doing a good job at it. So it's basically like a partner, not a boss, but a partner in this process for you that's going to make things run more smoothly and more efficiently. So really, as soon as possible, you want to start with a realtor and you want to start with a lender. And if you start with a realtor, then they're going to help you get the lender, right? They're going to help you get all of the other professionals, appraisers, home inspectors, all of the other professionals that you're going to need throughout the process of the purchase, to be able to make this move forward for you. So, if you have your pre-approval again, which we have successfully obtained by following all these tips, then of course you'll be able to stay within your budget, because, and as we are in the San Francisco Bay Area here, there is a lot of techniques. There are a lot of techniques for being able to position yourself as a buyer in a competitive market, right? And whatever is going on wherever else, the San Francisco Bay Area is still a very competitive market, especially if your price point is under $1 million. So you're going to really need a realtor to work on your behalf, because they're going to be able to show you how to best position yourself, and they're also going to be able to put in a good word for you with the agent on the other side. Because with the listing agent, who is the person who represents the seller, what they are looking for is a transaction that's going to close, right? So if they see that you're working with an agent who has made sure you've got at least one, hopefully many pre-approvals, who understands the process, who understands the property. All of these things are what your buyer's agent is going to do for you, and that makes you more attractive to the seller. And it makes it also so that you understand the process and so that you're happy with what you end up purchasing in the end. Because if you do try to go it alone, the problem is that there are disclosures, there are things that can be negotiated you wouldn't know anything about. And there's a lot of professional expertise that you miss out on by not working with a buyer's agent. So let's talk about some success stories, because it's always fun to see folks that were able to overcome their fear and get a pre-approval. Sarah was terrified of getting pre-approved because she thought her credit score wasn't good enough. This is like everybody. This is everybody. I have maybe 10% of my buyers know they have 800 credit scores, and that doesn't bother them at all, but they're still a little bit nervous about the phone call, right? So, just get over it, because a lender's job is to get you pre-approved, not to judge you, right? And if you feel anything but that, move on. because there are tons and tons and tons and tons of lenders. Um, Here's another one with Alex and Mia. They, I don't know where they were offering, but they were offering somewhere where their agent told them it was a good idea to write an offer without a pre-approval. That's not something that's going to happen here in the San Francisco Bay Area because listing agent's not even going to look at your offer if you don't have a pre-approval. So, pre-approvals can be obtained very quickly, especially if you tell a lender, I am actively looking with an agent and I need a pre-approval, and they will absolutely put something together for you very, very quickly. So that's great. And then, again, we're kind of back to, fear of the credit score, because of maybe a past short sale or foreclosure, or just, maybe had a loan that was written off because they were in college and they weren't getting the bills and so they didn't pay. You know, these things happen, right? And so there are steps that a lender will help you walk through to be able to improve your credit score. So, and again, you can. And as you see here in this particular scenario, he was ready to go in about 3 months. That's pretty typical, right? Because it usually takes about 30 days for your creditors to report. And you don't want to, again, like go out and start doing stuff yourself. So if you have something that's super old that's sitting on your credit, you may be better off to just let it sit there, because once it reaches a certain point, it starts to affect your credit score less and less, right? But if you go rush and pay that now because you're like, I want to buy a house, so I'm going to go pay off all this stuff, that actually updates that debt again. So it actually sets you back as opposed to if you had just left it alone, right? So you really want to, again, speak with a lender so they can instruct you as to what is the best path forward. And also, money is a limited resource. So you don't want to just go running in and paying off everything when it might have been a better idea to hold on to that cash and use towards your down payment, which would pay down your loan that you're going to use to purchase the property and make your monthly payment lower, right? And that's the thing where you're trying to get in a better interest rate. You're trying to get a better credit score because you're trying to get a better interest rate because your monthly payment will be lower. But one of the number one things you can do to lower your monthly payment is to come in with a larger down payment, right? So maybe you're better off doing that instead of trying to pay down every single thing that's late or behind in your credit score. Just going to check the thank you. Yes. Because it is kind of interesting how folks will run out and pay everything off and they don't have a penny left. And then they're like, great, my credit score shot up 50 points, and it's like, great, but now you have no down payment. So, all right. So, that's it. If you are a buyer and you want to talk about getting pre-approved, please do reach out. I will have someone from my team get back to you as far as getting your pre-approval going, and getting you, ready to jump out there and start shopping. And again, it's much easier than you think, but you just got to take that first step. Again, feel free to follow me on YouTube and Instagram. This training, again, will live on YouTube after today, so you can refer back. And again, I do a lot of funny, relatable, but also educational things on Instagram as well. And again, here is my phone number. I believe that's QR code for our website. Feel free to text or call or shoot me a message, and I'll make sure that someone from our team gets in touch with you. That is it for today. Thank you so much for joining us here at Crush Your Pre-Approval and Get Ready for Shopping. And I look forward to hearing from you. Please take care and enjoy the rest of your day.